Trump wants lower mortgage rates, and at the moment, he's willing to fire the Fed chair in order to make it happen. But here's the thing. If he succeeds, mortgage rates might actually go up. Or even worse, the entire financial system could unravel. So why does this actually matter to you? Because if you're looking to buy a home, it's not only going to impact how much you can afford, but it could also impact whether the next decade is one of growth or instability. And with that, should a president even be allowed to pressure the Fed to lower rates? Drop a yes or no in the comments. Before we get into Trump, Powell, rate drops, let's take a minute here and talk about the Fed. The Federal Reserve is the central bank of the United States. It was created to provide financial stability in times of crisis, while at the same time managing both employment and inflation. You've probably heard it before. It's a dual mandate. Keep inflation stable while supporting a strong labor market. So what does the Fed actually control? Well, the first is the most obvious, which is the federal funds rate, which is the short-term rate that banks use to borrow money from one another, which has an indirect influence on mortgage rates via bond markets and investor expectation. On top of that, they have oversight of banks, lender regulations, as well as emergency interventions during time of crises, which is exactly what we saw during the pandemic. As the markets became unstable, we weren't sure where things were headed, the Fed intervened. Not only did they do emergency rate cuts, they also started flooding the economy with money, which is the main reason that the Fed then had to intervene on the other side by raising the federal funds rate. Because they lowered rates, kept them so low for so long, what that did was that stimulated the economy. It gave businesses a lot of money out there, it put a lot of money in people's pockets, and then they used that money out in the economy, which then created supply issues, which led to inflation, and in some ways that entire intervention actually backfired. And that's because the Fed kept the federal funds rate too low for too long. But since then, we know that the Federal Reserve has raised the federal funds rate, which has not only slowed inflation down, but it's caused mortgage rates to rise. But with that, there's something very, very important to understand, and that's what the Fed does not control. The Fed does not directly set your mortgage rate, but rather that's based on market demand, especially the 10-year mortgage rate, not the federal funds rate. So now that you understand the role of the Fed, let's talk about why the Fed must remain independent. But before we do that, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. And if you want to stay updated on everything mortgage and real estate related, please consider subscribing to the channel. One of the main things to understand about the Fed is that the Fed is supposed to be independent of politics. And that's because if the markets believe the Fed is a tool for politicians, confidence in the US market is going to collapse. The dollar is going to plummet, while the yield on longer-term treasuries is likely to rise. And that's because independence gives the US dollar credibility and stability, while assuring global investors that decisions are data-driven, not election or political-driven. In fact, we can go back in history when President Nixon was pressuring the Fed to keep interest rates low for a longer period of time, which, as we all know, ended up leading to that 1970s inflation. So understand many times that political interference equals a short-term gain, but long-term pain. And along with that, independence in things like the Fed protects the economy from knee-jerk policy shifts. Well, what is Trump actually trying to do? Well, we all know that Trump wants lower rates, not just mortgage rates. He wants lower rates in general because that'll help stimulate the economy. On top of that, one thing that we've been talking about a lot is the federal deficit, and having a lower federal funds rate will actually allow the US government to pay less interest on their own debt. Understand that the higher the federal funds rate we have, the more interest we're paying on this rising debt. So if we can somehow get the Fed to lower the federal funds rate, Trump believes that we could save almost $1 trillion per year in our own interest savings. And because of that, Trump has put a lot of pressure on the Fed chair to actually lower rates. And at the moment, we know that the Fed chair has put his foot on the brake saying, no, we're not going to do anything at this time. We need to see either a break in inflation back to that 2% target or a break in employment, both which remain pretty stable at the moment. And because of that, President Trump has actually floated the idea of trying to fire Fed Chair Powell, even going as far as asking Congress if it's possible, because Fed Chair Powell says he can't be fired, saying he's actually independent of the other Fed board members. And the reason that's important is because the president does have authority to remove board members from the Federal Reserve for things like neglect or inefficiency. But this is where the law is unclear because the Fed is the chairman. He's not actually one of the board members, which the Supreme Court backed his claim saying that he was protected and that he can't be fired by the president. And that's where things get a little bit tricky because at the moment it looks like the president is trying to do a workaround and actually pressure Fed Chair Powell into resigning himself, even going as far and asking Congress if it's possible. And here's the thing, they said yes. And this is causing President Trump to go an entirely different direction. And now he's claiming mismanagement, where the Fed spent $2.5 billion on office renovations to actually try to pressure Powell out of office. So why does Trump actually want Fed Chair Powell gone? Well, he knows that Fed Chair Powell is cautious and he's not likely to drop interest rates until inflation drops further. And on top of that, he wants to juice the economy with lower interest rates while at the same time reducing government debt costs. So with that, I believe there are three possible outcomes here with Trump and Powell and how it impacts mortgage rates. The first one is that Trump forces Powell out of office somehow, which means he gets a new Fed chair aligned with his values and someone that's likely to cut rates aggressively. That in turn could cause mortgage rates to fall temporarily, which means you would have buyers out there celebrating. But at the same time, it's going to create instability in the market, causing markets to panic, bond yields to likely rise, which in my view actually sends mortgage rates bouncing back up. In addition to that, you have a chance that inflation reignites, which creates long-term damage to the market. Now, if Trump gets his way and Powell leaves, again, that creates instability in the market. It gets other countries looking at our country knowing that the Fed is no longer independent, which means they're going to want higher yields in order to buy bonds, while at the same time likely sending the dollar lower. Now, in my personal opinion, I believe the odds of that happening are probably below 5%. But the second option is Powell stays, but he's under pressure, which means you have the president doing legal battles, media attacks. In addition to this ongoing dysfunction in the market, the lack of transparency out there is what creates these issues. We've actually seen it. You know, when President Trump comes out and says he's going to fire the Fed, we actually see the bond market go up. And that's because of that potential volatility in the markets. So anytime where confidence in the Fed weakens, that creates volatility, which in turn is likely to send treasury yields rising because of that risk premium out there in the market. So in scenario one, if President Trump is actually able to fire the Fed chair, that's likely to send bond yields rising. If the second option, where he continues to put pressure on the Fed, that's likely to send bond yields rising. But even then, I think Fed Chair Powell probably holds his ground in this scenario and doesn't give in to the pressure of the president, which leads me into the third potential option, and that is status quo. Everything essentially remains the same as it has been, where Powell finishes his term in May of 2026. They continue to keep their cautious plan, right? They don't really reduce the federal funds rate. Maybe you get 2 times this year. But on top of that, I really don't see an opportunity for the Fed to drop the federal funds rate without a huge break in inflation and or employment, both which look solid at the moment, which we all know keeps Trump complaining. But here's the thing, it keeps the credibility of the Fed actually intact. So how does this actually affect you if you're someone out there in the market looking to buy a home? Well, I think you have to focus on your own readiness. You can't wait on political drama. You can't wait on the federal funds rate to drop so that interest rates drop. You need to focus on when it's the right time in your life. Trying to pick the top or the bottom in mortgage rates or prices is a fool's game. So rather focus on the things that you can control. Go out, get pre-approved now so that you know where you stand. Work on things that you need to work on, like your credit score, like your down payment, so that when the right opportunity does present itself, you're in a position to make an offer. The last thing you want to do is wait, and then the market does correct, interest rates do come down, prices do stabilize, and then you find the right house and you're not in a position to make an offer. Because here's the thing, if rates were to drop suddenly and you're not pre-approved, guess what? There's a lot of buyers sitting on the fence ready to make that move. And because of that, you're likely to miss the window. So while I am one of those believers that mortgage rates are likely to trend lower, I don't think it's going to happen all of a sudden. I think it's going to be this grind lower. I think there's an opportunity that we see rates below 6.5% by the end of 2025, but I don't think there's an opportunity that we see rates below 6% by 2025. And that's even if the Fed does cut interest rates 2 times this year. And that's because it's already built into the market. The market's already anticipating 2 cuts this year. So if they do 2 cuts, guess what? It's already built into the market. We saw it last year in September when the Fed cut by 50 basis points and interest rates shot up over 1%. And that's because the Fed had been transparent. They told you it was coming all along. And the fact that we're having a conversation already about the Fed's expectation to lower rates, well, guess what? The market's already built that in. And even if Trump somehow wins, gets Fed Chair Powell out, and rates drop, there's an opportunity that creates additional inflation down the road and pushes prices back up. So while there's a chance you could get lower mortgage rates, there's a chance that you could also get higher mortgage rates as well as higher prices, which at the end of the day means that you're paying more money for that house. But my question to you is that if mortgage rates did drop to say 5.5% because of political pressure? Would you actually jump in at that time? Or would you wait for even lower rates? Do me a favor and let me know in the comments. Remember, presidents come and go, rates rise and fall, but your buying power depends more on your preparation than it does on headlines. If you're serious about buying, wondering what you can afford, you can actually get in touch with me and my team using the link in the description of the video. Now, the one thing we didn't discuss in today's video is how a potential recession could have a huge impact on mortgage rates, but I cover it in this video right here.